Hey guys, it's Katie and
Jen.
And we are actually like outside. Look, we're in a parking lot outside doing this live video so that we can come to you and educate you all. So today we're talking about PMI, private mortgage insurance. This is something that you would pay within your payment if you purchase a home and you don't put 20% down, yes?
Yes, or it's also called MIP.
Right.
Way to confuse people.
Yeah, but it's the same thing.
Yeah.
So it's basically, hey, the loan to value is not at 80% or under, and so your mortgage company takes out insurance basically, just in case you default. So that's what PMI is. Now, some of us have it. How do we get rid of it? Well, you call your bank and you ask and you say, hey, look, I'm paying $100, $200 a month, whatever it is in private mortgage insurance, and I think my value's gone up. I would like to remove the PMI. So what they'll typically do is they'll send you out a packet, you fill it out, you send it back in. Usually you have to order an appraisal. The mortgage company will handle that for you. The appraiser comes out, determines, yes, your loan is actually now 80% or less of the value of your home, and okay, we can remove the PMI. And it's pretty much that easy.
Pretty much, I think. So if you, to do it with just an appraisal, you have to pay it down 20%. If your value's gone up, you can refinance and do it. So there's
That's true.
Yeah.
My particular bank, because I actually just did this a couple of days ago, they might let me get by without actually paying it down because the value on my house has gone up so much that I don't necessarily have to throw the nickels and the dimes at them in order to pay it down below the value when I first purchased. They may let me get away with just an appraisal. So I thought that was pretty cool. So it's about calling your bank and just talking to them, and they'll you know, bring you through those steps.
So I got some cool data. I'm reading my laptop, so sorry if I'm looking down. So we've had the question of a lot of people that say, should I wait till I save 20%?
In order to buy.
Yeah. 20% on a $300,000 house is 60 grand.
Yeah.
That's crazy. So I know I couldn't save that up. But so in our case, we did a 5% down loan, and our PMI is actually only $75 a month.
That's not bad.
No. So I did a little bit of data. So if you buy now at a 4.75% interest rate,
Which is where the interest rates are at.
yeah, and your PMI is $75, your payment, your principal and your interest is going to be about $1,560.
And that's based on a $300,000 house?
Yes, $300,000. If you wait, let's say until next year, which rates are going up.
We heard that. Yep.
They actually have gone up, so they were 4% last year. So I have it projected at 5.5%. If you wait and put down 20%, you're going to be at $1,618 a month.
So you're actually saving $100 by getting the PMI and buying now because the interest rates have that much of an impact. That's what you're saying, yes?
Yeah. So our payment is lower since we bought now. The prices have gone up. So we would actually be even higher than that if we had waited till this year.
Awesome advice, Jen. So moral of the story is if you're wanting to move, don't just take the easy route and slide into a lease again, guys, because you're probably paying a crap ton more than you would in a mortgage anyway. Don't worry about this 20% down thing. A lot of people have that hanging over their heads thinking, oh, I'll never be able to buy because I won't be able to save up enough for a down payment. Ask the question of a professional, or ask a professional the question, and they're going to point you in the right direction.
Or just hit me up. I like math, actually.
JD's a math
Graphic
geek.
design and math.
And new builds. She's kind of geeky.
I love new builds.
All right, guys. Happy Friday. Have an awesome day. Bye-bye.